The MPC rate decision seems going to be the overriding factor in South Africa today. But before we get into that, let's look at the manufacturing data that was out yesterday, showing a growth of 7.5% for the month of June, and that's from for the month of July. That's from a revised 9.3% for the month of June. We've got mining data out later on today. Do you think that these two pieces of data are going to be instrumental in the rate decision today?
Good morning, Eleni. Yes, look, obviously the manufacturing sector is an important sector within the South African economy. It's one of the biggest contributors to GDP and obviously is a large employer as well. So it will definitely be taken on board, I'm sure, by the MPC members. We've seen the manufacturing sector showing a renewed downtrend after quite a sharp rebound in the first quarter. And I think the manufacturing sector will continue to face a number of headwinds going forward. Demand domestically remains pretty fragile. At least international demand almost remains non-existent, especially given we've got a strong rand environment as well. So the manufacturing sector is struggling, and we saw yesterday's numbers coming out not as badly as some people expected, but nonetheless the trend is downward. In terms of the mining sector, remember the mining sector was the big drag on Q2 GDP, so that will possibly also support calls for an interest rate cut. But I think the mining sector is not that sensitive to interest rate movements. I think we've got to look at things like the rand price of gold, labour costs, etc. When we're looking at the mining sector. And in that regard, I think the mining sector is still facing also a number of headwinds going forward, especially with recent strike activity and with this persistent rand strength.
Michael, let's play out some scenarios today. People are talking about a 50 basis point rate cut. That's pretty much been factored into the markets at this point in time. But if that's accompanied with a dovish statement, then perhaps there is more room to cut. Do you think that could play out today?
Well, Eleni, I'm almost convinced that if we get an interest rate cut of 50 basis points, it's going to be accompanied by a dovish statement. It's going to be very difficult to justify a cut if you've got a fairly cautious statement. So I think, yes, the door will be left open for another interest rate cut later in this year. It's not our base case scenario. We think they're going to stop with a cut today of 50 basis points. So look, we're definitely going to be looking very closely at the tone of the policy statement, but I think it's going to be very difficult to say that we've bottomed in terms of interest rates here, unless we possibly get a very aggressive interest rate cut. If we get maybe a full 100 basis point cut, which some people I believe are calling for, then perhaps the market might feel the Reserve Bank has gone for a kind of a big bang approach and that's the bottom of the cycle. In that event, I would possibly also expect the bond guys to take a few profits, specifically the foreigners who are looking for that yield pickup. But I think if they only cut by 50 basis points, our interest rates are still relatively attractive, comparatively speaking. So I think that the bond guys, the foreigners at least, which have been pouring into the South African bond market, will probably stay here for a little while longer. And of course, they could still enjoy some capital appreciation if the Reserve Bank does cut interest rates by another 50 basis points later on this year.